Welcome back to Golden Rule Radio. Today is Wednesday, June 13th, and we're happy to talk about the new interest rate rise coming directly from the Federal Reserve meeting today.
As predicted, and we've talked about in recent weeks, we did see a rate hike. And Miles, before we get too far into detail on today's show, I want to just thank you all for the overwhelming and humbling response to last week's show. As you know, it was a little bit different angle for us. A lot of you called in. Some of you even called in and got to talk to Drew. And so just know that we'll keep you posted on opportunities like that. Feel free to call in anytime, and we will. We'll keep you updated on what those opportunities are.
You're absolutely right, Tori, and I think the opportunity this week probably lies in the 1-month bond. When we're looking at the yield numbers here, we'll definitely get to metals here in a minute, but I think given the Fed announcement today, it's worth mentioning what effect that has had on the various markets, including especially the debt markets. We'll throw a couple different charts up here just to cycle through, but what's grabbing my attention is the difference between, say, the 1-month yield at 1.8% compared to the 10-year yield at 3%. So in the long run, where do you think interest rates are going if the best you can get out of a 10-year yield is only 1% higher than a 1-month?
Unbelievable. Not a whole lot of confidence in terms of the bond yield in that 10-year treasury. That's not a good long-term picture for the economic and interest rate picture in the United States. But, you know, it's tough to find a decent return anywhere. And that's part of the problem. Now, they are raising the interest rates as predicted. Remember, they don't meet every month. And they do say that they want to raise rates 3 times, maybe 4 times this year. So they do not meet in August or October, but you do have the potential for 2-3 more rate hikes this year. And we'll see what ends up happening in the bond market because it really dictates more than Federal Reserve lending rates.
You know, Tori, and you compare that to, say, what the dollar had been doing in anticipation over the last couple weeks, even just from a technical standpoint. We saw the dollar come into what I would argue was pretty strong resistance at that 95 level. Lo and behold, it has bounced down from there. You look at that compared to, say, what the euro has done, which is quite the opposite, coming into some fib levels and turning up. So with this interest rate rise, I absolutely expect to see a weaker dollar over the next couple weeks. The euro climbing back up to at least 120, and I think the Dow's coming down too. So all of this could end up looking really strong for commodities, not just gold and silver, platinum and palladium that we deal in, but oil as well, which also just came off a nice dip and looks like it's going to start bouncing back up.
That's a great point. Oil is the only one that really is, other than the precious metals. You know, the dollar index is off 21 points. We're now below 94. And the Dow's off 120 points as we speak. What I noticed this morning, though, is I got pretty good confirmation that the Fed was going to raise rates when I saw gold dip down to that 1291 level, because I figured they're probably hitting it before the news comes out. Remember, each of the last times that we've seen a rate hike increase, we have seen gold rally. So we did cross that $1,300 figure, which, Miles, correct me if I'm wrong, appears to actually be some upside resistance now.
Yeah, Tori, you're absolutely right. I mean, double zeros are always psychological numbers. We're having a hard time pushing above that 1,300, which isn't unreasonable. That 1,300 number also is a 50% retracement level between the 2017 low and the 2018 high. So it's not unreasonable to see it kind of parked here for a little bit, although with the dollar turning down, the euro probably going to gain some ground here. Oil possibly coming up. Silver moving up to its higher support level right now.
Very exciting to me, actually.
And what I think is the Dow about to take its next pretty major step down as we move into late summer, early fall. I do think gold will hang here and eventually push up beyond this. My best case scenario, obviously, is always a double bottom in the precious metals market. Now, the double bottom isn't much farther down than we're at now. Still back down to 1285. That's $15 from here. Who really cares in the long run? About $15. But if we see that take place, that's a real good indicator that we're going to see that 1320, 1360, and I still think we're up over 1400 before the year ends.
And that should fit with the timing seasonally as well. Let's get back to silver real fast, because what excites me the most about the silver price action is it's not conforming to the gold price. And so we've seen the ratio drop from 82 all the way down to 75 here. So are we on the right track for a potential build into a ratio trade? Potentially. Let's just keep our eyes on that, and high-O silver.
Finally, rounding out the metals, platinum obviously at an outstanding purchase point right now for those of you looking to move into the platinum market. I am currently speaking directly to a client of mine right now that I've been talking to for the last week or two, who has been looking at that as well. In fact, he contacted me about it as we've moved into the lower end of that support level. So platinum is looking real good. Palladium, on the other hand, I think is kind of doing the same thing that the Dow is. You know, palladium is definitely acting like a industrial tradable metal, and you can almost lay the Dow chart over top of the palladium chart and they're going to look very similar. So I think, again, palladium down, platinum up, that ratio makes a lot of sense right now. A lot of our clients have already gotten into that. If you haven't, give us a call. So on the global economic front, we highly encourage you guys, if you have not done so yet, go back and listen to yesterday's edition of the McAlvany Weekly Commentary, hosted by our president, David McAlvany, and Kevin Orrick. It's worth going through because they discuss what's going on in Argentina and the money printing right now, and we are seeing that just keep repeating itself over and over and over and over again. All
IMF
over Europe,
bailouts.
IMF bailouts, South America, India. It's just the same song and dance over and over for the last 5 years, and it just seems to be getting a little closer to home.
We'll be talking about the same thing in 5 years. So, yeah. And remember, too, watch what happens with the Fed rate hike. It does have a ripple effect through the economy and through economic data. So keep your eyes on that, and we'll keep you posted next week as well. We can do more of a summation at that point.
So that's going to do it this week for Golden Rule Radio. As always, keep an eye on the markets, and thank you for listening. If you like what you heard, hit the subscribe button, ring the bell, head on over to Twitter at ICA Gold. You can stop by our website, McAlvanyICA.com, or give one of us a call anytime at 800-525-9556.
Thanks for listening, and have a great week.